The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I'm showing you a picture of the Swiss franc here against the U.S. dollar. And they've basically, and this is kind of the things that are, this is the thing that's going to, rock many markets. Quite a few things are going to have to be adjusted based on what's going on here. And Switzerland's abandoning, did I say that right? Is more than 3-year-old cap on the franc. And that's sending Europe's shares and bond yields tumbling all over the place. So, again, this is something you have to pay attention to. I've got a chart up. This is going to affect bond note yields, currency plays, and this is going to be the Wild West for a little while. This is literally quite amazing that they would do something like that without staging into it. There's a lot of, this is again the Swiss franc US dollar, we're trading 80. This is like the Russian ruble type stuff right now. Good Lord. Oof. And this is a real bar chart here. So, it's not a bad tick over to the left and squeezing my daily. This is a daily chart here, squeezing my bars up so it looks like a bad trade. But this is literally, this is a real trade. So, again, if you trade in currencies, you might want to trade a little lighter. We talked about that with the high volatility. Basically, from what I've talked to some people on some desks here, 100 billion in francs was wiped off the face of Swiss stocks. So they've had their biggest daily fall in 26 years. We're going to kind of cruise across some of the usual suspects and take a look how this is. The markets are actually digesting this. So we want to take a look at. Excuse me. We want to take a look at, first of all, how the U.S. stock market's taking this. Yeah, amazing. So, again, U.S. stock market yesterday, we had talked about this area below 94. We had crossed over this border, come down below, retested it, sold off again. But again, this has been, let me just kind of pull up the action from yesterday. Here's where we kind of came down below and then retested, got back down below. I thought we were actually going to settle below 1994, but we popped back above and we've reached up to that the powerful inflection point we talked about yesterday. This is a 60-minute chart. We reached back up into that 2027 area. So, and let me just show you that print there, 2027-25. So that's really, really important that we got back down below the important area that we've been speaking about, 2027, and have stayed below. This has been really a nerve-wracking experience around this 1994 daily unfair lows, and we reached lows yesterday of, and let me pull up my, let's see, data window, where are we at? Somehow it's off. There you go. Okay, so reaching lows yesterday of 1981. So again, this has been super volatile times. That 2027 area has still been a very big factor of what's going on, even with the day trading here. So I got chopped up a little bit down there, made a couple of points, actually made a pretty good ride on the downside and the retracement, but got stopped out a couple of times. But then yesterday when we got it back up to 2027, it was time to pick a battle again. So that's the story on the kind of the play-by-play of the S&Ps. And again, those inflection points are painted on the scanner. Here's a 10-year. This thing hasn't slowed down whatsoever in the midst of the sell-off or the rally, or however you want to look at it. This thing is just a bounding north, and we're trading above 130 right now. And this is going to be something to pay attention to with the Swiss franc doing what it's doing here. Let's take a look at the 30-year really quick, just to kind of go through some of the lists, and then we're going to pull into some stocks in a second, namely some earnings-related stocks, Citigroup, Bank of America, a couple others. Here's the 30-year. Okay to be long, not okay to be short still. Nothing new to talk about there. Gold, man, I was took off some positions in gold yesterday. So, I mean, not all of them, but just took off a couple because I didn't like the way the thing was closing. And now we've just gotten back, above that 2050 area. We've gotten back above these recent highs on this particular contract, above 2052. So we talked about getting a close above 1250, not 2250. Above 1250 is going to be a big situation for gold. We talked about targets above of 1250 from this 1200 area. Now that's kind of coming true. So what do you do now? What do you do now is I think you leave some gold on. We've reached some short-term targets around 1250. We actually reached a high of 1261 this morning. And I think you just kind of sit tight and let this breathe. And you may want to put stops down below 1244 back in the fair auction on the 240s, allowing these, see how these 240s kind of regulated this up. I actually got a little, just giving my personal diatribe here about gold, lightened up a little bit yesterday, but left some on in case we did spike up like this. I was getting a little nervous down here on the bottom. I didn't like the way this wasn't looking like it wanted to be away from these unfair lows on the 240. It just didn't want to give away too much, but left some on. And now I think it's just, leave some on in case this thing continues to climb. But short-term stops could be below 1244, of course. Got to take a look at gold because, these are just the massive move instruments here. Had a big rally on the close yesterday. I didn't see that coming either. That was interesting and weird, and really hadn't had any divergences to think that we were going to move like that. But we talked about not being able to get long until we got back above 47.72 on this, and we got some targets above of 50.39. But that's going to be a selling point for me about 50.39, just as that 55.11 was before. Then we have to take a look at the XLE really quick. This is something that just really gave it up hard before. Let me see where we're at this morning. 74.25. This didn't hold. We talked about digging in hard around 74.19 or 74.18. That hasn't really worked out, but it hasn't been a lot of pain either. It's been a great relative strength trade. We were kind of hanging in there, not making new lows as gold was making new lows, or excuse me, as oil was making new lows. And now it really hasn't significantly rallied. So what do you do now? I think you just sit tight on this XLE trade. I actually got stopped out of it. 74.25, we're trading above, obviously, the weekly unfair lows, but I don't know how much oil has left in it. We hopefully can get up to 50 and change like we talked about in the XLE. You can take shots above 74.18 on the long side with stops below again, remembering that the theme is lose a little, lose a little, lose a little, make a lot. So that's the situation on some of the usual suspects. And we got to take a look at the euro because this thing is getting hammered again on its lows. Just had a massive sell-off into that low of 115.75. Obviously franc related, everybody trying to adjust their positions right now. It's not just day traders at forex.com here on this one. This is major central banks having to deal with this right now. So we've got a situation where you're going to see some just massive volatility. If you guys are trading Nadex, oh my God, there's probably the 5-minute options on the euro and a couple other ones they're probably just so all over the place. It's probably a great time to trade short-term Nadex options. I haven't looked at them this morning, but My God, look at this thing moving. This is the 240-minute chart. This is the 60. So if you're trading the euro, we know that it's okay to be short, not okay to be long. We've been talking about that forever on a long-term basis. But on the short term, you got some levels here. Support on this is 116.38 down below. And this is 60-minute support. I don't have anything on the 240s. Obviously, we just looked at that. We had that resistance around 117.83. But short term, the numbers I can see are 116.38, and then back up top around 177 up in that area. But we're kind of in the middle of no man's land right now. So the yen, the carry trade against the dollar, let's just take a look at that really quick. Everybody's paying okay, here's the dollar situation. Obviously, that's just unbelievable with this news from the Swiss franc. Let's see, 91.17 still unfair lows on the daily. You got to pay attention to that. And 92.06 up at the bottom of the box on the 240. So what does that mean? That means that unfair lows on the daily, on support on the dollar, 91.17, as we've been talking about. We're kind of in no man's land here. This is kind of a big vol. I mean, good Lord, look at that move. But you've got short-term resistance at around 92.06 right now. The dollar may kind of relax a little bit and explore the rest of the fair auction on the daily. It doesn't have to, but that will be support down there at 91.17 on the long-term weekly. Obviously, you don't want to fight this long-term trend, but you've got a chance to wait patiently until 91.17 may be hit. That's kind of the way I'm looking at the dollar right now. There's one more currency. Okay, yeah, this is what I wanted to talk about. Got some notes sitting in front of me. I don't know why I don't look at them. Here we go. The ruble, as you can see, this is not being drastically affected, but I just wanted to take note of this, that we talked about, a while back, using these weeklies as a launching pad again, as this thing had pulled back and waiting for those confirmations. And as you can see, we kind of got above these dailies here. We retested the top of the box. In my opinion, you're still looking for support on this product. It heads higher to 63.78 right now is support on that. We'll be right back, folks.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're looking at the XLF here, and we talked about this being... What the heck is going on here? What just happened to my charts? Let me see what happened here. Okay, there we go. Never seen this happen. Hold on just a second here. Okay. All right. And we lost our navigator right here. Anyway, that was weird. We talked about laying off buying support on the XLF and the financials in general. So that's kind of held true. Opting out on that little area around the 2370 area was not a bad idea. It's looking back in time here. And that coupled with the 2387. So we were looking at not buying these support areas on the XLF, considering that we're going to more than likely have some more downdraft based on these rates. And the banks actually were kind of gearing up towards an environment that wasn't very rate friendly to citizens. They were looking at gouging people and allowing, their business model to thrive off of higher rates. Well, that's obviously not happening, and that's obviously not being digested very well by a couple of stocks within the XLF. And on top of that, you've got some, not the greatest news from Citigroup and Bank of America and JP Morgan and Wells Fargo. And actually, Wells Fargo wasn't that bad. But so here's the situation. The 2387 coupled with that 2370 is now going to have to be looked at as resistance. We're trading pre-market 2339. It looks at that's true. Yes. So we're going to take a look at Citigroup really quick. Earnings related situation here. That is today's print, I believe. Yes. So last print 48.55 on Citigroup. And we talked about looking at this. Here's the weekly situation on Citigroup. Talked about, getting down below weekly profiles 52.28. That was the first sign. And after that, we just got major confirmations getting below there, retesting. There's that retest, 52.24, 52.28 to 52.24, 52.28 being the weekly infra lows, and then getting back kind of into that, close below, get back and retest. And now we've just got, really zero reasons to try to pick a battle down here. And pre-market, we're trading 48.55. So again, Citigroup's been kind of showed its hand early before all this happened. They're obviously going to have to deal with the Swiss franc situation too. So it's amazing how many books are going to have to be rebalanced at this stage. This is literally amazing to me. And here we go. Bank of America, similar situation. Weekly unfair lows 1675. And remember, as these things had climbed higher, that was kind of a bullish situation. But with the XLF and the news and the news on the price action of the bonds and notes and their business model, as I just talked about, relying on that and getting below 1692 on the dailies, coupled with 1675 on the weeklies. As you can see, they got a new inflection point this week and just crossed it quickly. Today's Thursday, and this is Monday here. Or actually, this is Monday. So we got that kind of leader feel down here, the XLE, the news, and this has been something that it's been okay to be short, not okay to be long, based on the premise that we talked about. We're trading 1550 pre-market, so we're down here is basically what's going on. 1550 down. Man, what is going on with my charts this morning? Here we go. And by the way, you got a crossover on Navigator turning 0 at the same time. So you were painted these inflection points, and I know, like, what do you do now? This is something we talked about, though, the XLF and the financials. Let me get the ETFs up here. There's the XLF. There's the inflection points. Let's move into Citigroup in particular. Let's just pull up the S&P 500. Excuse me. While we're waiting for that to populate, we're going to take a look at JP Morgan here. And let's see, 56.54 pre-market. We talked about this, laying off all of these. Thank God we talked about that. Kind of laying off the financials. Here's WFC. Pre-market 55.10. This is another one. Okay to be short, not okay to be long, and I'm glad we laid off of that. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And here we have Kevin from Sterling, Massachusetts. Kevin, are you on?
Yes, sir. How you doing?
Doing all right. How are you today?
Oh, pretty good, pretty good. Hey, I was just wondering, in layman's term, did the Swiss franc just basically devalue their currency overnight, or did they make it higher? I'm just kind of...
Actually, it's more valued now.
It's more valued. Okay, so yeah, okay.
So euro cheaper, Swiss stronger.
Oh, wow. That's, yeah, okay, so I'm looking at the charts backwards here. Okay.
Yeah, that's the way I read it.
Okay. So basically, yeah, looking at... So would it cost them $1 and change to buy a U.S. dollar? Now would it cost them about 88 cents to buy a U.S. dollar?
Yeah, I mean, the euro's cheaper and the Swiss is stronger is the way I'm looking at this. And unless I'm completely reading this backwards.
You probably know more than I do. I just trying to, because then that would make sense because the U.S. dollar is down against the Canadian dollar.
Yeah, I mean, I'm going to have to. I'd actually like to bring my partner in Europe on about this because he is just. If you want to, we can. He and I can get into a little bit of discussion here.
Okay, I can listen to you on the through the internet. So if you can ask those questions, that'd be great.
Yeah, I mean that's kind of I think probably it's a great question, and I'd like to get into this because more than likely quite a few people out there have the same question. Mm-hmm. So what I'd like to do is, maybe the guys at TFNN, if Al, if you're hearing me, maybe you can give Eddie a call, and then Kevin, we'll actually get into a little bit of a conversation here, and maybe you can, glean some more information than just me saying yes or no to it.
Yeah, no problem. In other words, anything related to doing currencies would obviously people would run to gold, which has happened today. It's gone up a bit, $20 or so, because so in other words, okay, that's good. Well, Tom did say something about something was going to happen. I think it was a couple of days ago, and maybe this is what has happened. I don't know.
You know what? If he if he knew that and didn't give me a call, I'm going to actually.
Well, I don't think he knew. I'm sure he didn't know, but
because this is like what you retire off of. You kind of. It's one of those. They call them the O'Hare trades. You just. In Chicago, when I was there, you just put the trade on, go to O'Hare, get on an airplane, and go somewhere else. And if it works out,
yes, but unless it's the opposite way to you, then you got to run.
That's true. That's why you're getting on the airplane, Kevin.
Exactly. Okay, well, I'll hang up and I'll listen, and then if you talk to your friend there, it'd be great.
Yeah, it's a great idea, and a good question, and we'll try to do that right now as soon as they can track him down.
Okay, thank you.
Okay, bye-bye. Thanks, Kevin. Okay. All right. Have you got Eddie? Eddie, are you there?
Yes, I'm here, gentlemen. John, good morning. Listeners, good morning.
Great. Good to hear from you. Well, I know you're right in the middle of major currency trading constantly. I mean, we talk 20 times a day about what's going on with the currencies. So what's let's get into this Swiss. Oh, is Kevin on the three-way also? No, I think Kevin's gone. Okay. So what's going on with the Swiss franc here?
Yeah, I'll answer the question of your listener, Kevin. This is the situation. Switzerland, Swiss Bank, Swiss National Bank, abandoned today its 3 years old cap against the euro policy. That cap was placed 3 years ago, and it was at 120 of Swiss franc. So 1 euro was equal to the 120 Swiss franc, and the Swiss Bank Central Bank maintained that cap. Today it was removed, and euro immediately went down to the 0.80 cents of francs. So the 30% limit down. So today that was the case.
Good Lord.
Yeah, it was 120 francs per euro. Now, as we speak, is 0.8052. So it's like 40 handles, big time. That's 30% of the devaluation of the currency.
Oh my God!
Not devaluation, but repricing, right? So it's just the market took that way. They removed the cap and just hell broke loose. This is not devaluation, but it's just what real price it is.
Let's see, surges. Okay.
Is that answers your question?
Yeah. I'm just trying to put this all in perspective for the listeners here. Yeah, that's basically what you said. I'm just trying to get an idea on how to, looking at the charts here, the Euro Swiss franc. Here's, I don't know if you're looking at the screen right now. This is,
yeah, I'm looking. At the screen. I have the same at home, Johnny. It shows the same stuff.
Gotcha. So the only thing people can really, kind of grab onto here, these are huge. I don't even know, how do you quickly fairly price what's going on here? It looks like, we had the big volatile move, and then I'm looking at our 60-minute chart on the Euro Swiss franc here. We're trading 102.556, but, we've kind of gotten into a really tight range here, and this is our kind of box levels, if you will, on our 60-minute. 99.63 or 99.627 on the bottom and 106.455 on the top. That's a massive range. But how does this kind of get into a little bit of a tight situation here? It looks like we might actually head a little lower here.
Well, that's settled. Now we're getting to the technicals. Technicals, as you just said, it gives us a profile, gives us a resistance, gives us supply, gives us demand, potential buyers, potential sellers. That's where we get back to the business, to the technicals. And fundamentals just kicked in. I don't know how you can price it exactly 30%, or I don't know what's the limit for that. Either is a limit for that, but limit down probably was 30%. But yeah, 3 years old cap. It was like a surprise announcement. Sometimes happens, and you have to be ready for those kind of times. I don't know if you even have a stops when those stops will fly. You probably would not. It's not a good idea to have the stops because your stop probably will reach. I don't know how many. No, it's a difficult station. Many things happen.
Yeah, your definition of a surprise announcement, I'd like to know what that is, because this is almost like a nuclear announcement, because a surprise announcement would be that the U.S. Fed would, raise the discount rate 0.25% or something like that. That's a surprise announcement. This is, I don't even know how to quantify the category of what this will be in, because it's the job of the central bank the heads in the Swiss organizations that kind of run this to try to keep an orderly market. I mean, this is about the least orderly situation I've actually seen.
I agree with you, John. 30 handles, 30 basic points on 140, actually 40 basic points on one move, just one announcement. It's a lot. It's a lot. You can, it's like winning lottery. I don't know. Nobody could have expected that. Nobody probably had that kind of position in there. Only positions probably was against that 120 francs per euro, because it had been for the 3 years. It was no big deal here, but you can average a lot, leverage yourself 10 times, because the Swiss bank is like a money in the bank, and they had a policy keep the capped franc to 120 euros, and everybody been playing that corridor. I think the stops blew. If there were any, I don't know why it's a big reaction, because it's just simply, hey, one bank does not, Switzerland does not, it removes the cap, and they gotta go. See the reaction. Somebody lost, probably more people lost money than they made, and no idea how those high frequency things, as you just said, valuates the market, what valuations are. But 40 handles is a 40 handles move. It happens once time in a lifetime.
Okay,
it's a history, definitely.
And I wonder. I mean, haven't called any people on the desks at in Hong Kong and a couple of the forex desks that we talked to. But I'm wondering. People that had, this is a very, very good example of why you keep stops in on everything that you do. If you were trading this particular market versus any of the other currencies in the crosspairs, I'm wondering what the slippage really was on even having stops on something like this. I haven't looked at the. Let me actually pull something up here.
Yeah, you have to look at the data. Data feed.
Yeah, this is.
Sometimes you're not happy and complaining to your broker, or not happy when you see slippage 10 pips, 20 pips. I think you would be very delightful if you have one handle 100 pips slip instead of 40. From the 40 available.
Like one handle slippage might not be a bad deal on this one, but let me.
Yeah, you're right.
Let me look.
Consider yourself. Everything is relevant, right?
Yeah, no kidding. Let me go back to the Swiss U.S. dollar here, and this was a safe haven.
Yeah.
For a long time for a lot of folks, and actually they're getting a big move forward. But the Swiss stock market in general is just taking it on the nose here, because if we repriced our dollar super high, we've had a 15% move up in the dollar in the last couple of months. And that hasn't really affected the U.S. stock market. But generally speaking, a higher dollar usually means, just historically speaking, a higher dollar will usually mean the U.S. stock market has to reprice itself to more expensive dollars, and therefore it actually can be bearish, just as if the U.S. dollar gets hit hard just by a repricing mode. We're priced in worse dollars and usually moves higher, but this is definitely held true on the Swiss franc and the Swiss stock market. Actually, I want to pull up the 60-minute chart here. I want to kind of try to change into a 5-minute chart. Okay. So in 5 minutes, just, oh my God. 800 pip move in 5 minutes when that hit. Next 5 minutes, another 800 pip move. God, yeah, I mean, 100 pip stop slippage would be a welcome.
Would be like a gift, yeah.
Yeah, exactly. Yeah, wow. Amazing. Whew.
Yeah, we need to examine times and sales, but probably the stop is blue. That's why, you see those and high frequency trading trades probably kicked in. But, well.
Yeah. All right. So let me switch that back to 60s here. Let's go over a couple other things while I got you, if that's okay with you.
Yeah, go ahead.
Okay. Euro. Again, valuation of the Swiss franc in a huge way. Got the euro sitting here. We reached a low this morning in the 115 handle area. Was that the temporary bottom on this, or is this amazing to even rally back to 117 to get short again, considering what's going on out there? And excuse me, I'm drinking too much coffee this morning. And the QE talks on the euro, we're talking about fundamentals, obviously, and I want you to kind of talk about technicals, but you got this overhanging QE situation that they're going to just start stepping on the gas pedal. That's we enabled everybody to think like this and to do certain tricks without letting the free market actually just kind of solve those naturally. So where do you think this thing's headed? I mean, in my opinion, I think this thing's actually headed lower. What do you think?
It should, since Swiss franc is not only Swiss franc situation, Swiss central bank situation. It's also, as it says, it's QE, quantifying easing, and then just waiting when it's going to happen. But another very interesting thing is that affects this particular pair, euro dollar. It's a so-called geopolitical situation with Greece. They think they might need get exited because elections are gearing towards a party that is not proactive of the staying European zone. And the Greece probably would find a way of, getting this. It's not that Greece is a big country or waits a lot on the euro. However, Lithuania, my country, just joined euro. Just for that matter, if one country gets out. But that would be the message that the thing is possible. You know what I mean? Yes. And the exiting Greece, and plus, of course, economical situation, because all numbers were last months and months ahead was bad. Economy was not good, and PPI and no desired inflationary numbers were coming out. So technically, this breakdown from our balance, as you can see, from 1780. That it's also good stuff, good for the short people, bad for the longs, and it's a good place where selling up rallies and trying to get the at least retest lows, which is a little bit below 116 area. Yeah. I don't see any other reasons. Just continue. I'm shorting.
We've got to take a break here. Can you hang around and then we'll finish this up in about 5 minutes?
Yeah, go ahead.
Okay, great.
I will be there.
Great, thank you.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. Ed, you still with us?
Yes, John.
Great.
I'm here.
Great. Yeah, I was trying to figure out, the U.S. stock market is actually up right now. And, this kind of weird correlation that, U.S. dollar goes higher, U.S. stock market goes higher. Usually that's not normally, all things considered, the way things normally work. High percentage chance it doesn't work that way, actually. But what do you think, I've basically, in my head, told myself that investors of long-term equities, they can't like the concept, in my mind, of just shocking news like this coming out of the blue. And it seems to be, just a manipulated situation from the fundamental side by every central bank in the world right now. Just, hey, we're going to fix things by doing this. What's your thoughts on how this affects U.S. equities?
As far as manipulating the situation, everything is reflected in the balances profiles that we do have on display that you and I created. Why? Because the supply-demand areas is left as a footprint of the players or participants of this particular or that particular market, of any market. It's easy to see there what they're doing and what to expect. So, we know what to expect, and we act accordingly. We know the supply area, which is top of the profile. We know the demand area, which is bottom of the profile. As far as what United States equities or S&P 500 or general economy or broad market, whatever we're going to call it, will do, I was watching very closely our market breadth. If you put it on, and I looked yesterday, I think I mentioned to you briefly yesterday that market right now is at the line on the sand. These levels in a 15-point range from 2000 to 2017 on mini S&Ps, March contract, from 2017, that's where we're going to go. Above, we're going to go higher. Below, we're going to go lower. And timing is there at our hands as well. It was handed out to us by our market profile scanner. Why? Because the weekly breadth is nearly at zero. It's a little bit plus 7, but that constitutes 7. If we have weak close, like means we need to watch what the weekly close will be like tomorrow, and we want to see where profile will be, or market breadth would be, actually not profile, my mistake, on weekly side. And if that only goes just slightly under in the red side, that means the direction is changing.
Right.
This is line in the sand. Or we're gonna hop much higher from here, or we start selling rallies from here. So that would be my answer. This is line in the sand situation. As far as timing and price.
So I got about 45 seconds left. You never gave me your gut feeling whether we're going to go lower or higher, or you're saying we actually can't determine that yet.
Not yet. Yet. We need to close. We need weekly close to see where the weekly closes according to our market breadth, weekly market breadth.
All right, so we got about 30 seconds left, folks. And as Eddie's talking about breadth, we've been talking about the major inflection point area around that 2027 area. I'm showing them on my screen right now. That was previous unfair highs on the daily, and then current POC at 2025, 2026. Now, we got that 1994 down below 1995. That was kind of in play yesterday. And we came back and rallied back up into that 2027 area last night, 2027, 25. So we backed off about 10 or 15 points from there. And the breadth is very, very, back and forth across the dial here. So what Eddie's saying is you might not want to take any big positions until the end of the week, until we get some clarification on a weekly breadth. And we've been talking about trading light, so we're continuing to say the same thing. Guys, you've been great. Steve Rhodes is next. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.